Okay, so we are at 42,101, and that big green candle happened at my time, 4 o'clock this morning. Today I'm going to talk to you about 4 good reasons why we're having this bounce. And this bounce is actually very different from all the other bounces. It's super different from all the other bounces. I don't know if it's good or bad, but I can tell you that I'm not buying, and I'm going to show you why I'm not buying into this bounce at all. And it's not the reason that you think. It's not the reason that you think. So it's going to be a big one. I'm glad to be back. I was supposed to be in Dubai, but I decided to cancel it and stay here and be with you guys. So let's get the show on the road and let's do it quickly. And Kyle, you know, since we haven't had an update for so long, let's get out of bed. Yo, Banter fam, welcome back. I'm Crypto Banter, and what a good day it is. What a good day it is. Last night when I went to bed, Bitcoin price was struggling to hold on to the 38,000 level, and now look at Bitcoin, 42,111. Everyone's saying Granny's back. Run never went anywhere. We went on a weekend away. I was supposed to be in Dubai this weekend, but I canceled it. I was supposed to be on a Harvard reunion with my friends from Harvard, but I canceled to be with you guys and to talk about the market. So here I am. If you are new to our channel, welcome. Smash the like button, subscribe for daily content. Now we've got 4 shows every single day. We've got Hustle show in the morning, not Hustle show, we've got Miles' show in the morning, which is a DeFi show, and he is absolutely destroying it. He's destroying it. Miles is absolutely destroying it. Then you got Sheldino, and Sheldino is now doing what he's supposed to be doing, and that is educating. He's really on this like education mission. If you haven't watched one of Sheldon's show, watch Sheldon's show. Then you got this show, which is the fundamental show, and then lastly, you got Hustle show, which comes up after this. And in a second, Hustle will jump on and tell us what's going on his show. So here we are. Though some of you thought I'd never be back, right? Well, here I am. We're never, ever going to be deterred by the haters and people that try to defame us. And if you haven't seen our rebuttal video, go and have the rebuttal video. I did go to Harvard. Yeah, I did go to Harvard. So believe it or not. All right, smash the like, subscribe to the channel. Let's go. And let's talk about the Bitcoin price. And you do have the Bitcoin price. This green candle here is the 1 hour candle. We're looking at the Bitcoin price on the 1 hour chart. And what you can see is that we've gone up from yesterday from about 37,132. And then the price of Bitcoin went all the way up to 43,000. We're going to be talking about why the price went up, because one of the reasons why the price went up is, of course, Janette Yellen. Everyone knows about all of this Janette Yellen stuff. But that's not the only reason why the price went up. There are actually 4 reasons why the price went up, and we're going to be talking about all 4 of those. And then I'm going to show you why I want to say I'm not convinced by the bounce. Maybe not convinced is not the right word, and I'll show you what I mean. If you look at Bitcoin, you can see that so far we are exactly on the trend line. So we, as I said before, I think when we got here, we broke out of the cycle. We had a perfect retest, and we've been above this trend line for a long time. And what you can see is that for the longest time that we've been until we go back and we go below this trend line, I'm working with the theory that we're actually in a new cycle, and that we're going to continue to carry on above this trend line and possibly even to start going up. But one thing that is quite interesting is that if you look at the number of days since the Bitcoin all-time high, so you look at the number of days since the all-time high and where we are today, I think today it's 120th day of the down market. So we've been now in a down market for 120 days. That's a 4-month, effectively, if you want to call it a 4-month bear market, so to speak. So for 120 days, this market has been going down, and it's starting to feel like we are getting into what they would start maybe calling a slightly prolonged bear cycle. So it's not really a short bear market anymore. We're now talking about 4 months since the all-time high. And in those 4 months, we've had very few convincing bounces. In fact, we've only had one convincing bounce, which was this bounce over here, which actually broke us down of this continued downtrend that we were talking about. And if you look at this bounce today is slightly different. And what we're seeing here is we're seeing a few things. The first thing that we're seeing, William Clemente actually pointed it out, but what he's saying is after a short-term bounce at the end of Jan, we've seen the whales holdings slide back over the last 2 weeks. So he's saying that whales are no longer the ones driving this market. And so what I did was I went back to look at the charts of the whale holdings. And what you can see is that the ultra mega whales, so even though there's this narrative that the whales keep accumulating Bitcoin, that's the narrative that everyone keeps driving. The narrative in the street is whales keep accumulating Bitcoin, whales keep accumulating Bitcoin. But if you look at the data behind the narrative, so you look at the data here says that since July 16th, 2008, July 6, 2016, the number of wallets with 10,000 Bitcoin or above is going down. Now that kind of makes sense because what you're seeing is the price of Bitcoin go up, and 10,000 Bitcoin in 2016 is a very different 10,000 Bitcoin from 2021 or 2022. But if you look at the wallets with 1,000 Bitcoin, which I suppose we can now say are the new type of whales. So you look at the wallets with 1,000 Bitcoin, you can see that since February, these whales have actually been reducing their holdings, barring one little spike over here. Let me show you quickly. I'll show you the spike. The spike is what we call the oligarch spike. So you can see that that's the little oligarch spike over there. So from this point over here, the addresses with 1,000 Bitcoin or more actually declined quite aggressively until the oligarchs started buying. So you can see that over here, what happened was the oligarchs started to buy. Then we go into, call them the dolphins, people with 100 Bitcoin or more. And you're kind of seeing the same trend. You're seeing that people with 100 Bitcoin or more have actually been on the decline. So the narrative that whales are increasing all the time is actually not a correct narrative. It looks like whales are starting to reduce their holdings. And if you look at who's actually holding a whole lot more Bitcoin, well, the biggest class of people that's holding more Bitcoin is people that are holding one or more Bitcoin. And you look at the smaller holders of Bitcoin, the retail investors. And so what you're clearly seeing is that over time, as Bitcoin grows, Bitcoin is becoming a much more mass adopted asset, and the whales are letting go of it. Nothing to be concerned about over the long term, because we want Bitcoin to be less in the hands of whales and much more in the hands of retail and much more widely spread. Because the more widely spread it is, the less power the whales have over the price of Bitcoin. So on the one hand, it's not encouraging to see that people with 1,000 Bitcoin or more are actually dumping their Bitcoins into the market, and effectively this downtrend continues. And I think here, Will Clemente's chart is actually a little bit better than mine because he's looking at, he excludes certain holders. So that's that chart over there. The other thing that we're seeing in this bounce, which is very different from any other bounce, is this. So what you're seeing here is you're seeing the Bitcoin dominance. And the Bitcoin dominance here, we saw a big green candle. In fact, last night when I went to bed, the Bitcoin dominance was at around 43. And now the Bitcoin dominance is 44.21, which means that what we're seeing now is we're seeing a bounce, but the bounce is very much a Bitcoin bounce and very selected alts. So it's Bitcoin and very selected alts. So why is it? Why are we getting Bitcoin and very selected alts? Well, the reason is because we've been in a 4-month down cycle. The market is very nervous. The market has very much is suffering from PTSD. And they're kind of going, look, we're very scared of this market. We want to have some exposure, but we need to be very smart about where we're actually getting exposure. And right now, the market feels that if they're going to be in the market, they want to be in Bitcoin. And so what we are getting here is we're getting into a scenario where the dominance is starting to climb up again. And some people are saying it will get as high as 50. I don't think it's going to get as high as 50. I think it's going to be way, way, way lower than 50, to be honest. But I think that this dominance is going to continue to rise for a little bit, which is a good thing, because once the money goes into Bitcoin, then when people start feeling comfortable and start to get their confidence back, then they're going to take their money and they're going to start putting their money into some altcoins, particularly the good altcoins. And then once the good altcoins get all the money and they start running and they get higher priced, then the bad altcoins. So that's how the cycle is going to move. And if you look at that, so look at this. If you look at the ones that are moving, specifically, let's look at the ones in our portfolio which are doing pretty well. The ones that I'm paying most attention to right now are Luna, Arweave, I suppose the whole Luna ecosystem. And if you look at Luna, for example, Luna's about to smash its all-time high. So if you remember, Luna's all-time high was $103. It was $106 over here. I think the close for that day was $100. And Luna's about to smash all-time high. It's supposed to smash all-time high. Or it's going to smash all-time high. And when it does smash the all-time high, then it's going into price discovery. And the reason why it's going into price discovery is because the Luna that we are dealing with now, is not the same Luna that we dealt with when we had the first all-time high over here, which was in the beginning of 2022. It was just before New Year's. I remember I was celebrating. The Luna that we had here is not the same Luna that we have here. Amongst the big differences between this Luna and this Luna is that this Luna over here wasn't backed by Bitcoin. And if you look at the tweet by Kwon, he said the Luna Foundation just added 418 million to its reserves. So the current value of these reserves that the Luna Foundation is holding to defend the peg and to defend the Bitcoin price is $1.5 billion. And remember, when we were here, very few people knew about the $1.5 billion. So you see that. So very, very, very few people knew it. So to me, what I think is going to happen here is Luna's going to smash the all-time high. Once the all-time high is smashed, then we're going to go straight into price discovery. That's what's going to happen. The next thing that's very different is the last time that Luna hit here, Anchor Protocol was going to run out of money. It was on the way to run out of money to be able to pay the 20% yield. For those of you who don't know, Anchor Protocol is a protocol that pays 20% for people who deposit UST. And it was running out of money to pay for the 20% because it had more deposits than it had collateral. And so it wasn't earning very much, but it had to pay 20%. And now we are getting to a point where there is so there is in total, if you look at the total, if you look at the market cap, here we go, the market cap of Luna, and you can watch this, but I think the market cap of Luna is now $14.1 billion. Can you believe that? $14.1 billion, of which, according to Root to Find, 9.4 billion is deposited on Anchor Protocol, earning 20%. The last time Luna was at an all-time high, the Anchor deposits were only 5 billion. But remember, at the time, Anchor hadn't been recapitalized. Now Anchor's been recapitalized, and it can continue to pay these deposits for another year. So we're dealing with a very, very, very different Luna. Also, I think in all this Fantom mess, this whole Andre Cronje Fantom mess, we forgot to celebrate some big news about Fantom. No one spoke about this because everyone's so obsessed with the fact that Andre is leaving and Anton's leaving and everything else. But what we forgot is that Wormhole is the bridge between certain protocols and effectively Solana. And what you've got here is you've got UST now being able to move to Wormhole. So you've got users can swap into UST on any of Wormhole's supported networks and bridge the UST directly into Fantom with liquidity on the newly launched Curve pool. So no one's talking about this, that all of a sudden there's now interoperability between Fantom, Solana, and Luna because of the Wormhole bridge. And speaking of the Wormhole bridge, you'll remember that we wanted that the people that saved, or the company that saved the Wormhole bridge when the export happened was Jump Capital. And this week, on Friday, we're bringing back our Friday banters. And the banter, I want to show you who's coming onto banter, because it's going to be huge. It's going to be absolutely huge. So we have Raoul Paul, we have Kanav, who is the founder of Jump Capital. We have Tasha Labs, and she's an incredible macroeconomist. She has an unbelievable view. And then we have me. So you've got 3 billionaires. You can decide there who the billionaires are, but there are 3 billionaires who are going to be on the show on Friday when Banter comes back. We're finally bringing back Banter Friday. We wanted to bring it to you when we were sure that we could do the best banters ever. So that's who's coming onto the show. Anyway, going to be a massive show. If you like these guys, smash the like, give them some appreciation. Where is Harry? You know what? I'm going to get Harry back on the show for you guys. I'm going to get Harry back on the show. I'm definitely going to get Harry back on the show for you guys. Wow, it's going to be a monster show on Friday. It's going to be our biggest banter ever. If you just follow these guys on Twitter, you'll understand the caliber of person that we have coming onto Banter Friday. It's going to be huge. It's going to be absolutely huge. All right, let's go. Let's talk about. Watch Banter, exactly. All right, let's talk about why Bitcoin is going up and why I'm not actually buying this bounce. Let's see, I'm sure I had something for you guys here. I mean, we need to look at when Bitcoin bounced yesterday. So if you look at Bitcoin, I'm going to go back to the hourly candle because you can kind of see, when you look at the hourly candle on Bitcoin, that is where you can see where Bitcoin bounced. And effectively what happened is Bitcoin had 2 bounces yesterday. The first bounce that Bitcoin had yesterday was over here. See that bounce over there? That is the first bounce. And then the second bounce, the big bounce, was this bounce over here. So we kind of got to look at both bounces and say, okay, what happened? So what was this bounce over here? And then what was this bounce over here? What caused this to happen? And then what caused this to happen? So the first bounce is pretty easy. This bounce over here, the first bounce, happened when the NASDAQ turned. So yesterday, as the NASDAQ turned over here, that is when the Bitcoin price bounced. And that is because the market is pricing Bitcoin like a growth stock, like a tech stock, which I think is a mistake. I think the market is making a mistake. It's pricing Bitcoin completely wrong. It's pricing Bitcoin as a growth stock, and it probably should be pricing Bitcoin as a digital gold. And I know you're probably thinking to yourself, well, Bitcoin holders kind of want the best of both worlds. They want the market to price Bitcoin as a growth stock when the tech stocks are running, and they want the market to price Bitcoin as gold when gold is running. But Bitcoin does have more similar characteristics to gold than it does to a tech stock. I mean, it is being adopted like a tech stock, but it has characteristics like a digital gold. And if the market was pricing Bitcoin as a digital gold, well, then maybe Bitcoin would have hit an all-time high yesterday, because gold yesterday touched the all-time high. It is back down now. And I'll show you in a second why gold is back down now. Then you've got, that's what I tweeted about this yesterday, and I said, if you look at the NASDAQ, the reason why I was so confident that the market was turning yesterday is because if you look at the NASDAQ and you take the chart of the NASDAQ and you say, okay, let's look at the NASDAQ. The NASDAQ, from its high to where we were yesterday, was down 21%. So you see, the NASDAQ was down 21% yesterday from its high to where we were. Now, 21% on the NASDAQ it's an epic crash. It's a massive correction. And the reason why I say it's a massive correction is because if you look at the COVID dip, so here's the COVID dip over here, and you measure the COVID dip. You say, okay, cool. How much was the COVID dip? And you take that. In the entire COVID dip, I'm going to take it not to the bottom, but to where it closed. In the entire COVID dip, the NASDAQ only went down 28%. And now the NASDAQ is down 20%. So you got like, if you look at it, if you put things into perspective, you do have the NASDAQ down 20%. You do have the NASDAQ down 20%. And for me, 20%, when the NASDAQ is down 20% in a high inflation environment. So you've got the value of things going up, but you've got the NASDAQ down 20%. Then to me, I kind of say, okay, look, I may not catch the bottom, but for me, it's at a point where I'm almost comfortable to say, look, I'm not buying the top anymore. I'm not buying the top. It can continue to go down, but I'm not buying the top anymore. And so to me, that's why I said yesterday, I think that, you know what happens next. You know what happens next year. I think the NASDAQ starts to increase. And then you look at gold, and the market is not pricing Bitcoin like gold. But Bitcoin is clearly a better version of gold because it has all the properties of gold. But then I saw this, and they're talking now, US senators are talking now about locking Russia's gold reserves. So it just shows that gold, because it's physical and because it's stored in centralized places, then effectively it can be seized. And in times like this, when there's sanctions, this is not the first time that it's happened. I think in the 1930s, if I'm not mistaken, the US made a law that people could not hold gold anymore. And they had to hand in their gold and sell it to the Federal Reserve at a price. And that's exactly what the US is doing now again. What is the US doing now again? The US is effectively taking the US senators are talking about locking down Putin's gold. Now, I'm not going to get involved in the war and whether it's right or wrong and whether the sanctions are right or wrong. But the fact that this can happen, to me, shows the problem or just one of the problems with gold. So one of the reasons why the market recovered is because the market is treating Bitcoin like the NASDAQ recovered. Because the NASDAQ recovered, we started to recover. And I think it's wrong. You can see that right now, if you look at crude oil also was at a high yesterday, hit a high of, I think, just under 128. And again, I got a feeling at 128 that we were at a top. And so I tweeted yesterday. I said, I'll find the tweet here. But I tweeted yesterday and I said, it just feels like oil is toppy for me. It was at about 128. And I said, I just feel like oil feels toppy. And I mean, you can find the tweet on my profile. I said, I just feel like oil feels like it's hitting a top. And it has come down temporarily. So that's one of the reasons why Bitcoin is recovering. One of the reasons why Bitcoin is recovering is because growth stocks, and specifically the NASDAQ, is recovering. And for as long as growth stocks and the NASDAQ are recovering, right now the market is pricing Bitcoin as a growth stock. That's the first reason why Bitcoin is recovering. Second reason why Bitcoin is recovering is because of our friend Janette Yellen, and because she can't keep a secret. She just can't keep a secret. She let the cat out of the bag. So look at this. Look at the time here. This is 4 o'clock in the morning, my time. So 4 o'clock in the morning, what do we do? We get a pump. We get a pump at between 3 and 4 in the morning. You see that's when this pump over here happened. Okay, so what happened at 4 o'clock in the morning? Janette Yellen released a statement on Biden's executive order before the executive order had been published. So obviously there was a miscommunication somewhere. Obviously there was a huge miscommunication, and they were probably supposed to release the executive order yesterday, and they probably sent out a memo and said, okay, we're delaying it for a little bit. But someone in Janette Yellen's office never got the memo, and because they never got the memo, she released a statement ahead of the executive order. And what the market read into her statement, which is pretty much a good statement, she says, blah, blah, blah. President Biden's historic executive order calls for a coordinated and comprehensive approach to the digital asset policy. This approach will support responsible innovation that could result in substantial benefits for the nation, consumers, and businesses. It will also address risks related with illicit finance, protecting it. And she went all the way to say how her department, the Treasury, is actually going to help. So that's what she said. Okay, but now remember, at this point, the executive order hadn't yet come out. So you've got Yellen issuing a response to the executive order, and she indicated that the executive order was positive, right? So and that's what caused this green candle over here, is the fact that she indicated that it was going to be positive. And then you, Janet, would you? No, I wouldn't. No. I definitely wouldn't, Janet Yellen or Nancy. Oh, do I have to choose one? Wow. Okay, at the end, I'll answer whether I'd rather Janet Yellen or Nancy Pelosi, or none. Okay, but then we actually got the executive order. And the executive order is exactly what we thought it was. There's a couple of things you need to read into this executive order that Biden signed. Because on the face of it, it just looks like an executive order. But you got to look at the timing of it. This executive order comes out in the Russia-Ukraine scenario where Russians are potentially using crypto to evade sanctions, right? Now you get executive order. And in this executive order, what you get is you're saying digital assets, including cryptocurrencies, surpass $3 trillion market cap. So for one, Biden is acknowledging, the White House is acknowledging the size of the cryptocurrency market, which is something we haven't seen for a long time. And the growth. Then they're also acknowledging that 16% of adult Americans, or 40 million people, have invested in, traded, or used cryptocurrencies. So another thing they're acknowledging, if you read between the lines, is that now this becomes an election issue. 16% of American households, 16% of American adults, okay, now hold crypto. So they're acknowledging that this is now becoming an election issue, so to speak. The next thing that you are seeing here is that they are saying it creates an opportunity to reinforce American leadership in the global financial system and at the technological frontier. But it also has implications for consumer protections, financial stability, and national security and climate risk. They're saying, look, it's very good, and we want to reinforce it. We want Americans to lead, but we've got to make sure that we put in the regulation. And so they address the executive order, which calls on all of the relevant departments to put in protections to protect US consumers, investors, and businesses, to protect financial stability, to mitigate illicit financial and national security risks, to promote US leaderships in technology, and to promote equitable access, support technological advances, and ensure responsible development and use of digital assets. And to explore a CBDC, but we've known for a while that these guys are exploring a CBDC. So what's the long and short of it here? The long and short of it here is that this executive order was kind of a nothing burger, but it was a good nothing burger because they acknowledged a whole lot of things. They acknowledged that they need to remain competitive. They acknowledged that it can be used in illicit activity. This is the first step. This is the first step. There are going to be multiple more steps. The first step was to now acknowledge it and to realize the urgency under which they have to regulate it. The second step is to actually put in the regulations. And I think some good things are going to come out of it and some bad things are going to come out of it. The good things are going to try and keep America at the forefront. Those are the good things. The bad things are that now, because we have the Russia-Ukraine war, and we know that the Russians are evading sanctions using USDT. In fact, I was supposed to be in Dubai. I had a Russian friend who was supposed to join me, and we were each supposed to pay $2,500 to participate in the events in Dubai. And he texted all of us on the group, and he said, look, I can't really pay the $2,500 using a credit card, but would anyone accept USDT? That's what the text said. And so that's what's happening. And that's what the US is going to need to try and protect. The worst case scenario, and I don't think we're going to see the worst case scenario, but we have to be ready for it, is that they will deem that all non-custodial wallets need to be KYC'd. That for me is the worst thing that can happen. Because they're not going to ban Bitcoin, but they may really put the screws in. They may really put the screws in. So that is the executive order. All in all, the response to the executive order by big players is great. So that's the second reason why Bitcoin is recovering. The third reason why Bitcoin is recovering is very simple. It is because of inflation. And tomorrow is the inflation numbers. And the market is expecting 7.9%. And I think that if the market gets 7.9%, they should drink a tequila and celebrate. Because I think it's going to get a lot worse. It's going to get a lot worse. And this is especially after what happened yesterday. You all saw that Biden yesterday spoke about, or he banned purchases of oil from Russia, which is huge.
Today, I'm announcing the United States is targeting the main artery of Russia's economy. We're banning all imports of Russian oil and gas and energy. That means Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine. This is a move that has strong bipartisan support in Congress and I believe in the country. Americans have rallied to support their Ukrainian people and made it clear we will not be part of subsidizing Putin's war. We made this decision in close consultation with our allies.
So long story short, Biden banned the purchase of Russian oil. And he said, look, I know that other European countries can't do the same. They're not in the same position as us, but America can do it. And ironically, up until now, we have been worried that if inflation goes up, the Fed is going to really tighten the financial policy and they're going to really increase interest rates. The Fed meeting is on the 15th. It's about a week from now. So on the 15th of March is the Fed meeting. And right now, as it stands, there is a almost 100% chance that they're increasing rates by 0.25%. Everybody knows it. It's already factored into the equation. They can't really do more than that because we're in a war and we're in a period of inflation that we haven't seen in a long time. We are about to see the craziest inflation numbers that you've ever seen. We're about to see crazy inflation numbers. And it's not only because of oil. Oil is right now at $119 a barrel. Yesterday it went to $128. I mean, the last time that oil was at $128 was in 2008. Okay, 2008 was the last time that oil went there, and it just briefly touched it. And the irony is that I read an article from Zero Hedge, and this article says that Biden, to make sure that he could go up there and really ban oil purchases from Russia, he actually tried to call the Saudis and the UAE, the United Arab Emirates, but they didn't take his call. So both of them didn't take his call, and that's because they're playing a political game. They want the US's help in a civil war, which is happening right now in Yemen. So it's a big risk from Biden's part, and that's why oil is now up at $120 per barrel. But oil is not the only problem. That's not the only problem. The other problem is this: wheat. So, I mean, I saw this morning. I think it was the funniest thing in the whole world. He's a wheat farmer. So for 5 seconds, wheat farmers are going to get their thing. But look at the price of wheat. The price of wheat looks like a parabolic shitcoin. Okay, it looks like a parabolic shitcoin after YouTubers get paid to pump and dump it. Okay, so this is not, it's not us because we don't accept payment for pump and dumps. But you can see that the price of wheat has doubled. Okay, and the price of corn has also tripled since October last year. 50% since October last year. So Houston, we have a problem here. We are about to get massive inflation in the United States. The type of inflation that makes 7.9% look like a joke. We're about to see real inflation. Now, in times of real inflation, you need to be holding Bitcoin. You need to be holding assets of a limited supply. You can't be holding anything. If you're holding cash, and there's huge inflation, your cash is going to devalue. And if you think that the 7% that your cash devalued in the last 12 months is a lot, okay, wait until you see the next ones. Wait until you see the inflation that's happening over here. It's absolutely crazy. You're about to see crazy inflation. And the irony is, look, I'm not backing Biden. I'm not backing the orange president. I'm not backing either of them. But if you listen to this, it's just crazy.
More than anybody, okay? And it's an incredible thing that it's happened over the last few years, a lot of great things, and you're paying, what, $2 a gallon for your gasoline? That's okay. You know what that's like? That's like a tax cut. That's bigger than a tax cut. If Biden got in, you'd be paying $7, $8, $9. Then they say, get rid of your car.
Prices at some local gas stations, they're way above the average. Well, across the street from the Beverly Center,
So Trump actually, I mean, I don't want to say he called this. I don't want to say he called this, because no one could have called what was happening. Wait, what's going on here? Okay. So Trump actually, I mean, you could say Trump actually called it. I'm not taking sides with the orange guy or with the guy that keeps forgetting stuff. I'm not taking sides with any of them because this is a non-political show. We're apolitical here. I still haven't decided whether I'm taking Pelosi or Yellen, but I will decide by the end of the show. All right, last reason why the markets are going up and why this happened. So what you saw is, kind of like, as I said, oil starting to go down. It's not at the highs that it was. It's down 6.6%. Gold is also down from the all-time highs from 2070 and then all the way back down to 1983. The reason why that's happening is because if you think about why this war happened or why the narrative is, again, we will never know why the war actually happened. But if you think about why the war happened because Putin was concerned that Ukraine would be permitted into NATO. And if Ukraine, which is very close to Moscow, was permitted into NATO, then that means that NATO, and when you say NATO, it's all the countries that make up NATO. If you attack any of those countries, effectively all the other countries have to help you. So it's like if you have a pact with your friends that if one of us gets into a fight, then you all have to jump for me and fight with me. Remember, we used to do that when we were kids. Like if I get into a fight, you all come and fight with me. So that's the same thing that happens with NATO. Now, we heard the whole thing was around NATO. This whole thing was around whether or not Ukraine would get into NATO. And what we're seeing a de-escalation. So on the one hand, we're getting this whole narrative about how there's peace talks and people are continuing with peace talks. On the other hand, we are hearing now that NATO is off the table. The alliance is not ready to accept Ukraine for at least the next 15 years. So the whole war is around Putin saying, I don't want Ukraine to be part of NATO. And NATO has now come out and said, and this is according to this is not according to me, this is according to a post by the Jerusalem Post, and it says that for the next 15 years, NATO is not ready to accept Ukraine for at least 15 years. And what David Sachs says here, he says, before the war, the administration should have confirmed that NATO membership was off the table. And if they did confirm that NATO membership was off the table, then maybe we wouldn't go into war. And so he says the administration's refusal to take NATO membership off the table before the war will go down as one of the biggest historical blunders. Listen to this. This was before the war.
Thank you, Mr. Secretary. I realize that you don't want to get into the specifics of what is actually in this document, although my colleagues will continue to try to get them. But can you say, more broadly, when you say that there are core principles that you're committed to and to uphold and defend, does that mean that in this document you told the Russians point blank in writing that no is the answer to their demand for a formal bar on the expansion of NATO, the permanent exclusion of Ukraine, and the withdrawal of certain forces and equipment from Eastern Europe? Is that what this says? Is there anything different in this document than what we have heard publicly over the course of the last couple of weeks?
Again, without going into the specifics of the document, I can tell you that it reiterates what you said publicly for many weeks, and in a sense for many years, that we will uphold the principle of NATO's open door, and that's I've said repeatedly in recent weeks, a commitment that we're bound to. So the document, as I said.
You see, they don't come out, they try and give you a diplomatic answer, but they don't come out and say that this NATO thing is off. But now that there has been a war, they come out and say, okay, well, sorry, for 15 years, we're not ready to accept Ukraine into NATO. So maybe this whole thing could have been avoided. And the last we heard back from the peace talks, and again, I'm not a geopolitical expert yet. I'm still a vaccine expert and a virology expert, not a geopolitical expert at all. But what I've read is that in the last peace talks, Russia had criteria, and they said, look, you need to register Crimea, you need to register Luhansk and Donetsk as independent states from Ukraine, and you cannot join a bloc. You cannot join the EU, and you cannot join, when they say a bloc, you cannot join NATO and you cannot join the EU, because then you're putting Russia at risk. So it feels like there's a de-escalation. It feels like there's a de-escalation. I'm not saying the war is finished by any stretch of the imagination, but it feels like there's a de-escalation, and that de-escalation is what caused growth stocks to go up, and also caused gold to go down, oil to go down. Hopefully wheat will go down. Can't imagine losing my wife to a wheat farmer. That would be terrible. That would be terrible. All right. What else is there? What else is there today? Let's see if there's anything else. Did I leave anything else here? I love this. They took McDonald's away from Russia. So Preston Byrne tweets, he says, NATO has just established a no-fry zone. I don't know, crazy stuff. All right, so now I'm going to tell you why I'm not buying, because I told you that there's 4 reasons for this pump, and I'm going to show you why I'm not buying. And the reason why I'm not buying, I love that, you can be from me. The reason why I'm not buying just yet, the reason why I don't think we're out of it all yet, is because I'm looking at one statistic, and that is the discount on the Grayscale, trust to net asset value. Now, remember, Grayscale is a trust. The trust only holds Bitcoin. And effectively today, if you buy shares in the Grayscale trust, you are buying them at 28.7% under the net asset value. And this is quite a big trust. If you think about the size of this trust is, I think, about $20 billion worth of Bitcoin. It's the biggest Bitcoin holder in the world. Now, for as long as you can be buying the Grayscale trust at 30% under the price of Bitcoin, I can't see there being a big demand for Bitcoin or physical Bitcoin. Yes, there will be some demand, but why would big buyers, and talking to you like massive buyers in the market, and not buyers that are trying to evade sanctions, but buyers that actually want to invest in Bitcoin, not use Bitcoin for what it's made for, why would they buy on the open market when they can go and buy up these GBTC shares at a 30% discount. For me, until I see that this discount starts to close, I'm not convinced that we're out of trouble. I do think that we're in a new cycle. I'm not taking that back. I still think that we're in a new cycle. But I just don't think that we're ready for the bounce. And I think that the clue of when we're going to be ready for the bounce actually lie in this chart, funny enough. This is the chart that I'm looking at. So that's why I'm not ready to buy. Cool, got it? Amazing. Hustle, what's in the gaming show, bro?
We're going to go over a little bit of news from this morning and overnight in the NFT and the gaming space, but mainly we're going to talk about some blockchains that I think have a big opportunity to have more development in games, metaverses in the future, because there's some high capability blockchains out there that right now aren't getting the attention and the development capability put onto their chain for gaming. So I'm going to cover a few blockchains, a handful that I believe are pretty undervalued as far as gaming goes that I would watch out for in 2022 and beyond.
If you just don't miss Hustle Show. Just trust me, don't miss Hustle Show. Best alpha per minute show in the world, not only in this nation, actually in the world. Best dog in the world as well. Best dog in the world. What's the dog's name, Hustle? We all know the dog. No one knows his name.
Her name is Zoe.
Zoe.
Yeah.
Alrighty, buddy. See you in a bit. Also, tomorrow I've got a massive show. Tomorrow's huge because tomorrow we are going to talk about why this is such an important time in the market. And I'll give you a hint. For those people that got into the DGen-ish portfolio, in the first month, they're 12.3% up. Okay, they're already 12.3% up. But you see there are some tokens here that are up 100% and 152%. We're going to talk about what makes those tokens and why you need to be in the market. And then also, I have an announcement from BBS. I want to read it to you because they gave me so much information. But there's a lot of people waiting in the queue for their BBS. Well, we're going to clear the queue. They're also going to increase the CPM. They're going to increase their CPM, their cost per impression. So that means that now they're increasing the CPM from $50 to $150. They're saying, here's the announcement. They're saying, you can kind of read it yourselves. They're saying CPM boost, new boards, engagement mining, cash up, Q cleanup. Today's exciting day for BBS Network and its boards. A few hours ago, we released the new BBS, which you should go and check out. With the new features, with tipping commentators, mechanics adjustment, and several other platform improvements. But that's not all. We have some more exciting announcements for you. The first thing is they're announcing the payout from, as you all know, after we adjusted the CC payout to the BBS market, the BBS price increased from 3.3 to 13.7 cents. The CPMs remain the same. As a consequence, the cash out rewards have been reduced significantly. To compensate for that, they're now increasing the CPM by 3 times. And they're going to start paying out for C Gaming, which is our gaming channel, for charts and for lunatics. They got the engagement mining, and they're going to clear out the queue. So they're going to clear out the queue. So this is a big time. This is huge. If you're not on BBS, go to BBS. We do have the biggest, or we have the second biggest community in the world now, because we now have, there is one community that's bigger than ours, but we have the Banter community, we have the Lunatics community, and we have a community just for chartists. We have the community just for chartists. So make sure that you go and check it out. Remember, you earn for every post. You earn, just go and post. You earn for every post. Maybe it's not a lot, but you earn for every post. Alrighty, I'll see you guys again tomorrow. Love you guys madly. Remember that every day we will continue to work to make you guys the most profitable community in the world, no matter what the haters do and what the haters say. I'll see you guys again tomorrow. Until then, trade well, my friends.